Recording in progress.
Yes guys, good morning, how's it going? So, I'm finally getting around to recording a video breaking down one of the trades I took recently for you guys. Now, this one is going to be a recording of the ADA trade I took. I actually hit TP yesterday because this was a super clean setup, and as you guys well know, I love finding sweeps of previous month's low, previous weekly highs and lows, etc., and then framing my trades from there on, because when you get a sweep of a previous month's low, weekly low, or daily lows and highs, etc., then you get an idea of where price is going to go, where price is going to trade to after that. Because after a sweep, you normally get a reversal and it trades in the opposite direction. Okay, so I hope you get some value from this and you start adding these few little things to your chart breakdowns so that you can frame your trades from there. Okay, and while I'm here, just thanks for your support. It's amazing. I absolutely love what I do. I think about charts 24/7. I think we all do. All right, very passionate about it, so thanks. All right, so I'm going to share my ADA chart. This is the monthly. I'm just going to hide this panel for a second. Hide framing panels. There you go. So this is the monthly chart for ADA. Right, so obviously we closed November's monthly candle, opened a new one, and immediately I saw a sweep. Right, so I think this is quite a frequent occurrence. Okay, when you close a monthly candle, the next monthly candle generally sweeps the previous month within the first couple of weeks, and you know you could probably catch some very good moves from there on, as I did here with this ADA trade. So what I'm going to do is I'm going to hover my cursor over this monthly candle and find out the low. So 3.3873, so I'm going to mark that off. See, 3873 monthly low. Okay, I'm going to label that previous month's low. Put that in the middle. I'm then going to drop down to the weekly chart. Let's just move that over. Drop down to the weekly chart, right? And if we look at this doji, and this is very similar to what happened with gold, yeah? Gold did exactly the same thing. We had a doji, we took out the weekly high, and then we proceeded to take out the weekly low. And then after that, we turned bullish, and then I traded gold up. So what I'm going to do here is I'm going to mark off the weekly high. I'm going to mark off the weekly low. Right, and if I hover the cursor over it again, we've got the high 0.4388, yeah, 0.4388, not far off. And then this one is the low 4017, 4017, 4017. Okay, and so that's your previous week's high. I'll leave that P WH and go top left, right, and I'm going to label this previous week's low, bottom left. I like mine to the left. Right, so there's the sweep of this weekly candle, sweep of the monthly low, and I'm going to mark off this sweep here, okay, because this will be our target. Right, so the high of this candle, 0.4557. Okay, bang on, sweet. So we make that the previous week's high, or the weekly high. Top. Okay, cool. So we've marked off all of our sweeps, right? I then drop down to the daily time frame, and let's see what we got. So this previous monthly low was swept by this price leg, and then in doing so we swept previous weekly low, okay, and then we got a really nice push up, and in this price leg that pushed up we took out the previous week's high. Okay, so we've purged quite a lot of liquidity, but the main thing is that we swept previous monthly low, so that gives us more weight. That gives us more weight on our side that the price is going to continue in the upwards direction. So what I'm going to do is I'm going to mark off, I'm going to start a new one. I'm going to mark off the where I entered in. You know, we're going to use the replay tool, And then what I'm going to do is I'm going to drop down to the 4-hour chart. And then what we've got here is we've got an imbalance or opposing fair value gaps all through this, yeah? So this V-shaped reversal that snatched liquidity from the previous monthly low, we've got an imbalance all through there. So I'm going to mark that off, right? And that then becomes imbalance, balanced price range when you've got opposing fair value gaps. I'm going to label that BPR. BPR, okay, cool. So what we've got here now is after we pushed up, we retraced back into this balanced price range, and then we went sideways. As you know, that's what happens on the weekend. We just go sideways. Now I'm going to just go back up to the daily, and I'm going to mark off Friday's low. Okay, let's have a look. So that Friday low was 4089. 4089. Okay, so that's Friday's low, or previous day's low. Okay, so go bottom left. Okay, sorry, previous day's low. And if we drop down to the 4-hour, move that over. So we've got previous day's low below the weekend range, which is low liquidity time period. And then come Sunday night, we actually manipulated down below the range, took out previous day's low into this balanced price range. Okay. So when we're bullish, or when we anticipate price to go up, we then want to see a wick below the daily opening price, which is what we got. And if we want to use fibs as well for that extra confirmation, we can see roughly where that was on the fib levels between 50 and 61.8. We just front run the 618, fell short of it. Okay, but that's all right. So I've seen these setups occur quite often, so I was quite confident to jump into my long position once ADA swept the weekend range and previous monthly low, and this candle started to pull up. So I entered just here, right? Stop loss below that 50% level. So yeah, entered here. We've got a nice push up. So let's just see where we end up. Okay, so we pushed up, and what we've left behind here is an order block. Okay, this down close candle before the push up is our order block. So what you could have done, you could have waited for the safer play. You know, you get the sweep, you get the push up, the down close candle, the push up again, and there's your order block. Okay, so people think that because price is pushed up, they've missed the move. Nah, you wait for the down close candle before the push up, and you mark that zone off. So if I mark that off, mark the body of the candle, and then this would have been your safer play, your safer trade entry, right? We'll go below the grey zone, and we'll mark that off as OB or OB, right? Go to the right there. Okay, cool. So there's our order block created after the push. I'm already in, and let's just see how this played out. Wicked in, and then straight to TP. All right, targeting the previous weekly high, because what else is price going to target? You know, we've swept previous weekly low, we've swept monthly low, real strong push up. Price has grabbed the fuel, it's grabbed the liquidity for the next move up. Where's price? Where price is not likely to come back down. Like, it's got another objective, i.e. push up higher. Okay, so I hope you find this video useful. If you've got any questions, just drop me a DM. I'd be way happy, way more than happy to answer anything. But as I say, guys, the first thing you should be doing when you open up a chart is starting from the higher time frames. Okay, do your top down analysis, as it's called. Previous monthly low, previous weekly lows and highs, mark them all off, yeah, and just see what's not been taken, right? or what has been taken, and what highs have been broken in doing so, or lows have been broken. So you got your market structure shift as well, which is what we got through this price leg here. We broke market structure here, and then we retraced back down to the 618 imbalance, created a weekend range, previous day's low, Friday's low, and then come Sunday night we got the wick down. We took the liquidity from the previous day's low, from the weekend range, rebalanced this imbalance here, or BPR, and then we pushed up nicely. I think took TP at previous weekly high, settled at about 220% profit on that one, but it did go a little bit further. We did actually stop at, if I just play that a little bit more. Right, okay. We just fell short of this fair value gap up here. Well, actually, we just tapped it, but even if you did have this marked off, you probably wouldn't have got your entry for short anyway. So thank you guys. Thanks for watching. I hope you enjoyed the video, and I'll see you on the next one.